Hi guys, so in this video I'm going to talk about a strategy which is available, and once you get it, you actually get the source code in the code review video. And in this video I'll be going through most of the logic and some performance. Okay, so basically, let's first talk about the concept behind it. Okay, because that's probably the biggest takeaway from the strategy. Okay, and the concept behind it is basically building levels automatically and trading them. Okay, and that has always been the biggest challenge, because obviously when we look at the market, we can see the levels, straight away, and some people see them in one way and other people see them in a different way, right? So the challenge was always to how do we actually go about building levels. And there are numerous, approaches, pivots, previous day levels, week levels, yearly levels, I don't know, zigzags, etc. And there are so many, right? In this current strategy, I came to a different approach where I'm building levels using part of the ADX indicator. So if you ever read, if you have a look at the book and how the ADX indicator is actually calculated, it has a few parts to it, such as DM plus, DM minus. There's also DI plus, DI minus, etc. Okay. Now, what we can do is we can actually take the directional movement indicators and use them as level identifiers. So they pretty much show when the market makes a big move, right? So for example, here, right, we can see that this is the D. I'm currently using, the strategy is built in a way that you can actually use any indicator. And if you watch the code review, you'll understand that it's not necessarily designed to use the particular indicator. The particular indicator is just used as a pretty good example, which has some optimistic performance. Okay, so but you don't have to use it. You can easily adjust it to use, I don't know, a CCI or whatever. Anything which it has to be directional, right? CCI is not probably too directional, but it has to be directional, right? So any impulse in a way in the direction of an uptrend or downtrend, that can show some sort of level to where we got to, right? For example, the DM plus here, right, makes a move, and we can see that creates a level. Okay, and the challenge here is basically to not to actually build the level, but actually to manage it properly. And that is the biggest problem, because you can, for example, say that we're going to build a level every single time when the DI plus, hits a certain threshold. Okay, but for example, this bar can hit a threshold, this bar can hit a threshold, and this bar can hit a threshold. But in this particular example, all these bars are going up, so that's absolutely fine. You can continue moving the level up. But what if one of the bars, is lower than this? Then your level is just going to be jumping around all the time, and it's gonna look pretty ugly. Okay, and it will not make too much sense. It'll just copy the price. Okay. However, what we want to achieve is basically we want to see when the movement has ended, excuse me, and put a level there, because that's where probably it will come back to and try to either overtake that level or bounce off it. And you can build various strategies based on this concept, where we identify the level and then we work with it in a bounce way or in a breakout way. This particular strategy is built to work with the breakout pattern, all right? But as you will see after you see the code review, you can see that you can actually build maybe another 20, 30 strategies just based off this concept, with various rules added and subtracted, and just use the code base provided to work with with this particular approach of tackling the market. Okay, so after you can actually establish the level, right, you have to do something with it. You cannot stay there forever. So for example, you can say, okay, every single level that's going to be higher than the previous one, I'm going to replace the old one. Okay, and that's also a problem because you'll get to a level which is just never going to be tackled, and it's just going to stay there forever. So you need some sort of logic behind this concept, which is going to allow you to bring the level down at some point when the threshold is hit again by the indicator. So for example, here we can see that this level is taken down. However, it's important to understand that this level is taken down for a reason, and the reason is because this particular level has been alive or valid for this amount of bars. Okay, so basically the user is able to set, and you can optimize the number of bars for which the level is actually alive. And after that, it's still there. It's still, it continues to plot, but if a new threshold is hit by the indicator, the level is allowed to be taken down. I mean, to be placed lower or higher if we're looking at the levels which are on the other side. As opposed to when we're going up, we're always allowed to replace the level with a higher one. Okay? So basically the concept is the market goes up to a certain state, okay, and stays there. And if it hits it over and over again, we're allowed to replace it. But if it hangs there and that level never gets approached, and doesn't get approached ever, we allow the level to go down at some point. And that's the biggest takeaway of this strategy. Okay, now the strategy itself, I mean the entry rules and the exit rules, in the particular code base provided, it's a very simple strategy, but the amount of strategies that you can derive from this is just enormous. 20, 30, easy, not a problem at all, okay? But I'm just going to talk about a particular concept that's covered in this code, and you will understand that there's so many other strategies that you can do based off this. Okay, so the entry rule is very simple. The bar has to break through the level, and to be honest, it doesn't do that too often, okay? And there are a few reasons for that. Mainly, when the market goes up, it actually forms another level, and that's also considered an entry signal. This can actually also be a scale-in signal. Now, there are a few filters that are important to understand, and those filters that are used in this particular strategy are actually uncovered in the code base, and you can see the video which is inside. And I talk. There are not too many, but they're quite important, and you can play around with quite a few. And there are things like, so for example, how about this? If the level is not, active anymore, or as I call it, alive, do we want to enter or do we not want to enter? I would say in this particular case, we do not want to enter. So we eliminate those entries, as well as maybe at the same time you might want to enter. Okay, so it's really up to the user, and it's very easy to edit that code if you need to. Okay, and also, so the level above has to be the level up has to be above the level down. Sometimes they actually the one overtakes the other, and that could be a sign of something. So for example, we can see, well, not here really, but there are rare spots where it does. So the red one actually goes above the green one sometimes. I can't really find a spot right now, but you can find it, okay? So that could be also a filter, and quite a few other bits and pieces like that. Also, the exit is quite, you can go very, very creative with the exits, okay? So the current strategy would actually exit. So for example, here it enters long, and it exits right here because this level down has stepped down right here. It exits, okay? Now, its original stop is down here, and you can actually add a risk level here and make an additional filter saying that, oh, this level is too low for me to enter, it's too much risk for me. Okay, this trade will actually also exit if the level becomes inactive. That's also an exit, an option that'll exit. They can actually optimize. Not in this particular strategy. It's just hard coded, but you can make it and you can see how good it goes. Okay, so long story short, okay, let's have a look at the performance. And I mean, I'm just looking at out the box performance, right? I'm not really interested in optimizing. I just want to show you that this strategy can bring in results, okay? Okay, this is NQ, 60 minutes, right? 40 grand. Well, I would say maybe the drawdown is quite big, okay? But I mean, it's just out the box, right? I did not really even optimize anything. You can play around with this. You can play around with how many trades you want to get. So this actually goes with quite a few trades. I think this is over, yeah, that's 135 trades, okay? So overall, I just want to mention that this is a working concept, and the idea behind providing strategies to the public, in my case, in my project, is to give people the option to work with what they get and not to look at this as a ready solution, as a black box and something that's finished. It's a framework that you can extend yourself if you code, or you can talk to us and we can extend it for you. And it's so basically we provide a concept and we provide a template. I provide, and after you see, and learn it a little bit, you can see how extendable it is, and how many cool strategies you can actually build around this. Okay, so many people come and ask for backtests, but it's I think it's a bad idea to provide backtests. Although I have tried to provide backtests with the strategies, with in-sample and out-of-sample data. First of all, they get out-of-dated pretty quickly, and people come in a month and they ask, so how's the strategy performing now? Like, I have hundreds of strategies. I'm not trading them all, okay? I provide a concept, and if you like the concept, you can take it and extend it or use it as is, okay? Play around with it, and, this can spark off new ideas. Okay, so the idea is not to sell a strategy, because in my personal opinion, you cannot buy a strategy, plug it in, and it will work. You need to understand the mechanics behind it and how to use it. Okay, otherwise, I think it's just useless. Okay, so overall, I hope this video uncovered a little bit of how the strategy performs and what the concept is behind it, which I think is a really, really interesting approach of tackling the market. And just feel free to connect in our Telegram group or email me for extra questions, and stay in touch. Thank you.